Hi, and welcome back again to Tim Bingham's Options and Volatility newsletter. We'll take a look, as we always do, overall market, volatility, and some unusual option activity. So let's jump in and take a look. First, on the UOA front, taking a look at GOGO, G-O-G-O, which has seen big repeat call buying here. You can see GOGO made the list again yesterday with implied volatility jumping more than 11%. You can see now Ivy at the highest level by far over the past year, which sets up ideally for a covered call trade. I pulled off two scenarios here. Here's the covered call back from February 13th, right, with the stock at 765. That covered call buying the stock, selling the March just slightly out of the money, 8 call, would have paid about 707. And then yesterday with the stock higher, right, that covered call actually got cheaper because the IV jumped to 105. Previously, IV right around 75. So the covered call trade at just over 701 with the stock at 788 at close. Previously, with the stock at 765, that covered call was actually higher because the calls actually went up more than the price of the stock. Stock up roughly about 20 cents. The calls up about 25 cents. So this is ideally for that kind of covered call trade. As far as the overall market, and you can see GOGO just kind of meandering here, do have earnings coming early March. S&P still continues to languish right above that, 6,000 level, just off the all-time highs as well. We've been in this just ever narrowing consolation period here. It just continues to bleed out sideways. We're right at the 20-day moving average. You can see ever since the Trump bump kind of faded a little bit, we're, basically going nowhere, mired in the muck. So 20-day moving average, right, 6,000 as far as big number support. That trend line that is held forever continues to hold. We'll see if it breaks or if we get a bounce here. Although the 10-year yield at 4.5%, putting a little cap on multiple expansion in stocks, as we talked about, at the highest valuation multiples they've been. In the case of the S&P in history, it's still over 3 times price to sales. Only once previously did it hit there back in December of 2021, right before a 25% pullback. That's when interest rates on the 10-year yield were at 1.5. Now we're at 4.5. Should have multiples lower. Instead, they continue to grind higher. We will see. And the VIX pretty much mired in the muck as well, right around that 16 range. You can see really not too much action this year. Brief forays up towards that 20 level that were immediately met with a pullback, right, and really has held that kind of 14 level. So we're right around the 16 level. We'll continue to kind of chop around here as well. So interesting times. This go nowhere market favors absolutely selling option premium. With the VIX around 16, at least option prices are suitable for that. So until next time, as always, here's to good trading. Take care.